Hello everyone and welcome to Moementum channel where we talk about finances, personal development and investing. For those of you who have followed the Moementum channel in the past, you know that I mostly invest through Wealthsimple and I use their service for a way to invest on autopilot. I use their exchange traded funds and I'm very pleased with their service. But about a year ago, I started tapping into a different service that Wealthsimple offers. So they have a service, they call it as Wealthsimple Trade, where you can buy and sell thousands of stocks of your choice in exchange traded funds at no commission. So it's a brokerage at no fee in a nutshell. So I decided that I want to give it a try and pick my own stocks. Of course, I didn't invest a big majority of my funds into it, and only started to explore it, see how it goes. Back in February of 2019, I started the personal account that you can see here on the screen, and gradually over time added some funds to it, just to explore and see how I can do kind of a stock picking and how I can perform. I'm going to disclose how I performed over the span of less than a year. Two accounts that I have here. One is the personal account, which is open in February, so right about a year as we speak, and the other one I opened it in July. So you're going to see that account that is only worth less money and also has been opened for a shorter period of time. But let's take a look at it and see what stocks I've picked, how they've performed, and I will be also sharing with you kind of my thought process. If I were to do this again, why I would not be picking these stocks, not purely from a number perspective, but also maybe from the thought process and the fundamentals around the stocks. So let's take a look at it. As you can see here, and when I pick the all, in other words, you can see as far back as this account was opened, which as indicated was February, I have a total of close to 2,700, and the account has done a decent job. It's been up close to 13%. In fact, 12.85% has been the growth of this portfolio and has been up $331, close to $332 there. Let's take a look at the funds that I have here. I have a number of different funds, so I'm going to click on See All Holdings, as you can see, and then we're going to analyze them one by one. The first account that I have here is a Canadian stock. It's a REIT, which is a real estate investment trust, AX. So let's take a look. As you can see, it's Artis Real Estate Investment Trust. And the beauty of these real REIT accounts, in short they're called REIT, is that they pay you a monthly dividend. And that's exactly why I wanted to pick some of these stocks and have them in my portfolio. So today, of course, the daily performance for this stock has been negative, but if, let's say, you pick a broader range in a month, you can see the performance. 3 months, their performance has been down, but in a year, they've been up 16.75%, which is why. And as for my performance on this account, so I have 6 shares of them with an average price of $10.60. These are all in Canadian dollars, and my total return has been $7.92 or 12.45%. Decent return for a year. Keep in mind that the dividends that are being paid here are not automatically reinvested. So this calculations are not taking into account the dividends that I've earned on this account or any of these stocks or ETFs that I have. Second account that I have here is Bristol-Myers, which is a pharmaceutical company, and I'm going to perhaps show you the total return. That's probably give you a better idea. But as you can see, scrolling down, the total return has been impressive. So I have 4 shares with Bristol-Myers. The total return with Bristol-Myers has been 41.36%. I think that's just amazing. And of course, the Wealthsimple Trade keeps track of the different activities that you've had, different purchases that you've had. It also gives you some idea of around the fundamentals of the stocks, right? One thing that you can notice for Bristol-Myers is their 52-week high price, which is 68.34, and right now this stock is very close to that. It's 63.81%. So going back, and I'm going to actually switch to, rather than showing you here on the screen today's price, I'm going to show you the total value, which shows you overall performance of these stocks. That's a better view. Now right off the bat, you can see how they've kind of performed so far. Caldera or Cloudera, it's a cloud stock that I have over time purchased 31 shares At one point, the Caldera was doing terrible. In fact, I bought it at the time where during their quarterly reports, the price of the stock had kind of declined greatly. It had gone down tremendously, but as I bought it, and it didn't stop there and it continued to go down. So it was a little bit of gambling at the time, but I believed in the Caldera. It's a very good cloud stock company, and they were partnering with a number of renowned organizations, which continued to kind of reassure me that I want to purchase more and take advantage of the dollar cost averaging. So over time, I bought more of Caldera stocks, and now I have 31. My average price for Caldera is at $10.28, and overall the return has been 4.35%. Now keep in mind, this stock was doing better, but today, only today, it has gone down by 2.63%. So had the stock had a better day, probably this overall return would have been better. But those are some of the ups and downs of the stock market that you cannot control. I also have one share of Salesforce, or ticker symbol CRM, which has had the return of 25%. I own 3 shares of EXE, which is a Canadian company. It's called Extendicare. And if you scroll here, actually, it gives you a little bit of concept as to what the company is. So this is kind of interesting. So let's say if you're not familiar, Extendicare operates as a holding company that engages in the provision of nursing care, home health care, retirement living, and management consulting services. I believe that these are, good type of companies, because as people continue to age, there would be an increasing need for these caretaking type of businesses, and this is a company here in Canada. I've done some research into this company over long term. They have been doing well, and the fundamentals for it was good as well. What I also liked about this company was the fact that they give a monthly dividend. So their monthly dividend currently is at 5.69%, and I've had a return of 12.87%. So my average price is at $7.38, which it's fairly close to their 52-week low price. So I would say I got in to this stock at a very good time. Moving on and looking at the remaining of the stocks, I'm going to kind of go through them more quickly. I own 3 shares of GWPH, which is a pharmaceutical company. Again, is GW Pharmaceuticals. As you saw here, the return for it was 3.6%. Now, this has been a very volatile stock, I would say. At one point, I was deep into the negatives. I was in a loss, and then it kind of recovered back, and now it's again gone down. So this is where we stand as we speak. Hubs is another cloud stock. It's HubSpot, and I'm going to give you a little bit of details. It's a cloud-based marketing company based in the US. I have 1 share, and it's performed 14.59%. At the beginning of the video, I told you, if I were to redo kind of this whole journey, what companies probably I wouldn't have bought. I would certainly not have bought Jetline, Jet, J-E-T. I didn't do quite enough research, and to be honest with you, this is a new Jetline that has not even been operationalized. So in fact, you can see it's inactive in the stock market because they have some corporate actions being investigated. So it is one of those stocks and companies, in fact, that aims to kind of tackle the high cost of airlines and try to be a low-cost carrier airline here in Canada. There is almost a duopoly here in Canada. We have Air Canada and WestJet, and of course, if there's one thing that you can be sure of, is the fact that these big corporations are not gonna let the smaller businesses to kind of chime in and steal their market share. So that's what this company, Jetline, is currently struggling with. I bought 42 shares of them, but granted, the shares were very cheap. So I would say probably I spent only $20 Canadian to buy these shares. The sad part is, though, I have lost 89% of it. So I'm at a loss of $16. Not as extensive in terms of dollar value, but definitely very extensive, close to 90% in terms of percentage calculation. So definitely a lessons learned for me there. Next, I have 6 shares of Laurentian Bank. So this is Laurentian Bank of Canada. they pay a very decent dividend. Their dividend rate is 6.12%. Their PE ratio is also very low, and currently I've had a total return of only 0.47%. The return has not been the best. Now, granted, this stock has been very volatile. Take a look at their 3 months return. You see, they were doing way better back then, and again, look at the volatility of this stock. Over the 5-year span, they have had a 12% decline, but again, I almost got into the stock because of the low valuation and also because of the high dividend yield that has been consistent. So definitely something to keep an eye on for me. I owned a little bit more stock shares of the Sirius stock, which is the Sirius XM. It's a internet radio, and I sold some of it. So some of course, these stocks that you see here, I've bought into them, I've sold some of them, but this is what, of course, you can see as of the latest status. So for Siri, I'm at a profit of 25.92%. T stands for TELUS. It's again a share of a Canadian company. TELUS is a communication company here in Canada. They have mobile carrier services. They also have TV and cable. And for this stock, they also pay a decent dividend, and I'm at a profit of 12.67%. So the stock value has grown for me. VZ or Verizon, similar type of company, but of course in US, it shows a growth of 5.06%. And lastly, that WC or BMO, Canadian High Dividend Covered Call ETF. But knowing that the yield for this stock, the ETF, is 6.87%, which is quite high. That was probably one of the reasons I got into it. Obviously, when you are getting into high dividend ETFs, sometimes you're sacrificing the growth. The dividends might be higher, but the potential for growth usually is lower. So there's one of those sacrifices that you have to make. Now, I'm going to quickly move on to my tax-free savings account, and there's a little bit of less of stocks there, so it's not going to be taking us that long to review that. So for this one, I started opening this account, tax-free savings account, in July. It's a shorter time frame, but the return again has been decent. Overall, I'm at 6.92% return, up $113 Canadian dollars. The stocks that we have here, let's take a look at the overall return, the total value return. I own 2 shares of AbbVie with a return of 4.44%. I also bought 2 shares of Exact Science Corporation. This is almost a speculative stock for me. It's one of those stocks that I did not an extensive research on, but based on listening to Jim Cramer podcast, and you can see it kind of pops up on my screen as well. It's a diagnostic medical company, and they are getting into the colorectal cancer, prostate cancer, and I thought it's actually a good company. I value their mission and what they are trying to do, and although this company is currently not profit making, I believe in the value that they're bringing to the patients. And at the same time, I think there's potential for this company. So their 52-week high is 124, close to that. So my average price is 103. So I anticipate that this company is going to rebound and gain. You can see, for example, today it's regained almost 3% of its value. So it was at a higher loss before. But it's definitely one of those speculative stocks that I own here. I bought today, and exactly today, 1 share of Facebook. Facebook was doing very well, and today, based on their recent quarter, their stock almost tanked, and I just thought that that's the best time to buy, and I bought 1 share of Facebook today at $207.68. This price that you see here, of course, is at the US dollar value of it, right? And you can see down here, it's equivalent to $279 Canadian. And what happened was the stock actually regained, and I bought it at a very good and decent price, and it's rebounded, and it has a 0.89% gain in 1 day alone. I have PDI, but again, it's one of those real estate REIT companies, dynamic income funds, monthly dividends, 3.84%. Sky is an ETF for cloud stocks, 12.91%. Snc-Lavalin, there was a lot of headlines around this company. It's an engineering firm based in Quebec, and it's a very good company. It's a Canadian company, but there was some debate around corruption and some political issues around it. That's why the stock price for this company, if you look at it, actually tanked. And I thought, again, that's a good opportunity. This company overall has been doing good, and they will even pay, I think, a very small dividend yield at 0.26%. At this moment, they are not profit making, but you're looking at the 52-week high price and overall their past performance, I think this stock has potential to grow. So I bought it at an average price of 25.80, and the stock has grown by 20% since November 11th. So only in the span of 3 months, 20% growth, I would say it's decent. Twilio is again a cloud stock company, growth of 14.5%. VMW, again, a cloud stock company, 11%. XSP and ZCN, both of them are among the best ETFs in Canadian market, and I bought them recently, and you can see the performance, 1.49% in the span of few, I would say, weeks. And ZCN, again, 2% only in the span of few weeks that I bought this ETF. As you might have noticed, as I started, the background was a little bit brighter, and of course we are here in the evening, so it got darker. Thank you for sticking with me on this video as I walk you through my Wealthsimple Trade kind of portfolio. I do not actively invest in this stock, but I'm really considering to start adding more funds to this. The stock has not performed that bad, the portfolio has not performed that bad, so I will continue to fund this account, and as I do, I will be sure to capture my experience through the videos on Moementum channel. I hope you enjoyed this video. If you want to take a look at my other portfolio that I have with Wealthsimple, there it's a much larger portfolio, and see how it's been doing and compare it to this. I will definitely be sure to put the links down here in the description or at the end of this video. Let me know, of the stocks that you just saw here, do you own any of these stocks? If you own any other stock that has been performing well, I would love to hear from you. If you enjoyed this video, please smash the like button and subscribe to our channel. Have a wonderful day.